Good morning, everyone. How was your trading day yesterday? We ended up with quite a strong bull trend that lasted really the whole day. We opened pretty close to the low of the day, and then we closed on the high of the day. So pretty strong bull day. And I'm active on Reddit. I kind of look at posts that people put, and I've seen a lot of complaints lately on the types of markets we've had. And they're complaining because they've been doing one thing that makes money, and now we're kind of transitioning into a different kind of market. And then so what they were doing before is no longer making money, and they're complaining about the types of days we're having. Historically, this is actually more of a normal type of day where the volatility is a little bit lower, and it's just more of a bull trend. Now it is a strong bull trend, but what I mean by historically it's more normal is it's mostly the volatility. And in fact, this kind of market where you have an average true range of like around 5, that actually gives you a little bit more predictable setups. And to me, I believe this is actually an easier type of market to trade in than a high volatility market. So let's get into talking about it. There's three things I have in my chart: the low of the overnight low, the overnight high, and I also have a line for 5,900, just kind of as a marker for the big round number. On the open, what we did, we had a big bear bar, and ultimately this ended up as a bear trap. But at that moment when that bar closes, you don't know that. But one thing that could tell us we might have that this might end up being a bear trap is, let me flip over to the daily chart. This is our daily chart. This is what the market has looked like. We've actually been in a bull trend for 2 months now, and we've stayed above the moving average, and we've even bounced at the moving average last week on Friday. And then Monday, the holiday, gapped up, and we had another bull close. We're in a bull trend where we're bouncing off the moving average. There's a good chance that the low of the day is going to come early. So when you see this big bear bar, and there's another stat that you know that I talk of a lot, is that 50% of moves on the open reverse. So if we're getting this in a larger bull trend, and we're also coming down and basically testing the prior day's low, there's a good chance this might end up reversing. The market often likes to go the wrong way first before it goes the right way. But looking at yesterday, big gap up, and then we got 3 bars in the wrong direction, and then the market had a trend for the next hour or so. So this is what the market often does. It usually goes the wrong direction. It usually goes too far in the wrong direction, and then it has to go too far in the other direction. So on the open, big bear bar, then a second bar, failing to break below prior day's low. What about buying here? Well, it can be a bad trade or a good trade depending on how you manage it and how you adjust your stop and your profit. So if you buy here and then you go for a profit of, I don't know, like 2 points. You buy above this bar and you go for 2 points and you get out here. And then you put your stop, it was down here. So you're risking, well, let's see, you're risking about 10 points to make 2 points. Okay. We have to be right almost all the time to make that profitable. And what this is, this kind of setup, after you're following this big bear bar, you might get a second leg down off of it. So your odds right there are not good enough for you to be trying to scalp off of this setup. You're also buying into the moving average. So that's going to hurt your chances there as well. So we have 2 reasons why this is not such a good scalp. So by buying there, if you manage it wrong, then it's a bad trade. But if you set your profit in the correct place and manage the trade correctly, then if you buy here and maybe you put your profit target at least 2 times your risk, so at least put it up here, and probably better to either continue to hold or take off half and hold the rest. So if you do it that way, then you're taking profits up around 59.30. And if you watch the video I made Tuesday morning, yesterday morning, I was talking about how I thought the market probably would get up to around 59.30. So if you held until there, then that is many times what your initial risk was. So you are taking advantage of the potential move you have. So when you're wrong, you don't lose too much. But when you're right, that lower percentage of time when you are right, then you're allowing yourself to take advantage of that full range of profit. So this is how I look at something, that the setup, it can go, is it good or bad? This one's actually both. It just depends on what you do, on how you manage it. So I'm not going to mark it as a buy. It's not really a traditional setup for me, but I just want to point out, I thought about buying here. I didn't actually buy right there, but it's really important to point out the difference in how you manage your trade, what the outcomes are when you manage it correctly versus incorrectly. One trade I do want to mark early here, I'm actually going to mark this one. And I thought about this for a while. Let's point out what's going wrong for this trade first. Well, pretty quickly, what's wrong is we're basically at the highs of the day here and the highs of the prior day. So we'd be buying into that. Okay, that's what's wrong with it. The second thing that's wrong with it is it's a somewhat of a weak signal bar. So there's a big tail on the top. Okay, so there's two things that are going against it. What's going for it is that now we've had 5 bull bars up after this basically failed move on the open. So this might be a bear trap. The bears got trapped. They were selling below the prior low, and now the market might be trying to break out and at least double the size of this early range. So maybe like this. And you can actually see that's kind of where the first time they took some profits, that's where we went sideways for 30 minutes, or really went sideways for a whole hour here before starting to move up again. So buying here, based on what I've showed you, is this a scalp or is this a swing trade? Well, I think you need to be swing trading off of this. So you're buying above the moving average, you're buying following 5 bull bars. And I'll see this, I'm pointing this out because this is just something I see a lot. Normally we want to buy above the best looking signal bars. Something like one of these where the body is most of the bar without much tail. But sometimes you'll see these, it's like a bar that keeps you out of a trade. And I've made videos about this in the past of weak signal bars. If the context is right, that overrides a weak signal bar. And in fact, a weak signal bar can actually just be a way to keep other traders out of it. Like, since this is a weak bar, probably a lot of people will avoid buying above there. But actually, if you buy above that, that's a place where a lot of bears would be exiting. They sold here. Now they've had 5 bars up. We've had 3 closes above the moving average now. And to me, I actually see this as a possible breakout point. So I see some bulls buying. I think the advanced traders or smart traders, I think they're buying here. I think the beginners are staying out of it. So it's like a way to keep some percentage of the traders out of buying. And I see the bears. I think a lot of them will get out. So either way, there's sellers buying back here, and there's new buyers buying here. So I like buying there. And we pointed out the odds are not all that high. So I think you should be swing trading because your odds are not too high. 2 times your risk, I don't think that's enough. I think, with this, where your risk is not too large, I think, like I said, with this measured move, I think that's where you go for your profits. Failed move on the open, that gives you some context on where to put your measured move. So try to get out up here. So you risk 4 points to make 20 points, 22 points. All right, so you're not going to be right all that much, but when you are right, you're going to well offset um, the times you do lose. So that's kind of something important to point out there, this buying above a weak signal bar like that. As the market starts to move up, notice what you get. You start to get these gaps. So this point that we were talking about, this ends up as a breakout point. The market breaks out, and it never pulls back to that high. So there's a gap right here. I'll mark that in. We have a gap. So as these bars are forming, that's the way you want to be thinking about. Like we have this gap on here, and we're above the moving average. Market's moving up pretty consistently. So you should be thinking bull trend. This might end up as another reversal, right? We're still in the open, but you should at least avoid trying to sell. Don't try to be selling in here. We have a gap, bull bar, sideways bar, another bull bar, another bull bar. So now we have another gap. Another gap here. And we're above this important support and resistance point of 5,900. So as the market starts to make these little tails and pullbacks, then these are now acting as support. And we want to try to be looking to buy above these. Avoid selling because of the trend and try to be looking to buy. With targets, probably one good target is the place of this gap here. So we have this high, the market broke above that, and then all these little pullbacks we're not able to come back and break below and close the gap. So with the market being above this support and resistance level, I want to mark a couple buys here. And so buying here, this is coming after a double bottom above the measure move, above the moving average, and above this gap area that we've created. We have a high, market pulled back once, pulled back twice, and really didn't make any headway going down, and now we're getting a bull bar. So that's a good area to buy there as well. Then follow through bar, another good place to buy. And for the same reason, I think I'd go ahead and mark this as well. So this third bar, now we have another attempt down, and so this is even a higher low. We have these lows, and now this is a higher low. So the bears tried once again to go lower and then couldn't. So similar to how I was thinking this was a potential breakout point, I think this is a potential breakout point as well. Market's moving up, the bears are trying several times and they can't, and probably going to continue to go higher. Now, if someone was trying to sell during this, they would have really gotten hurt. And this is why I push so hard on, if the market is trending, don't bet against the trend. So if you were to sell above this bar here, let's say, you really didn't have much chance of a profit. Maybe there were a couple points during here, and then that's all you got. Then the market kept going up, and it kept going up. So even when the market was far away from the moving average, like here, it was about 15 points away from the moving average, and you think, oh well, we're way above the moving average. We've probably gone too far. I'll go ahead and sell for it to come back to the moving average. Well, the next time it touches the moving average is actually way up here. So it's 20 points higher, right? And so that's the danger. There probably is a decent chance that you'll be able to get a scalp out of this, but then when you're wrong, you're going to have a huge loss, especially if you're trying to sell and then sell more higher. So like after, if you're trying to sell here, and the market just keeps going up, then you end up with a huge loss. It's better to instead try to find these buys as the market's going up, or even buy the pullbacks. So what's better, trying to sell far from the moving average in the bull trend, or try to buy blindly during the pullbacks? I would rather buy blindly. So I would rather buy without even a setup, because the context is more important. The market's going up, only want to look to buy. So bear bar, better to buy the close of that or even buy below it instead of trying to find ways to sell during this. The market continues up. Our measured move puts us up here, and I'm not surprised that this is where we got a little bit overextended right here. The market saw that this was the measured move here, and the sellers disappeared, the buyers bought more aggressively, because why buy up here when they could buy here and get to that point? So the market rushed up to it, and it basically just got to this measured move point. Now at this bar, this bull bar, it's an important question. Is this going to lead to higher prices, or is this now an exhaustive end of the trend? Because anytime you see a big bar late in the trend, you have to worry that the market might have gone too far, and then that might end up as the end of the trend. The market, this is doing this to try to find the right price. Sometimes, I would say usually, the market actually goes too far to find the right price. So if someone was buying during here, and then they got this big bar, are they saying, wow, what a great place to buy? Or are they saying, oh, well, I have all these profits, then now I have even more profits in this single 5-minute bar? They're probably going to take some profits. So we're also breaking above this channel. So some kind of channel right here. 75% of the time, the market will pull back into the channel. 25% of the time, the market, after it breaks out above, it will create its own channel and continue up. So this is more akin to the 75% of the time, because it pulled back in and kind of stayed within the trend that we'd already been having. It did not break out above and then have this stronger trend and continue up. So this was the more common outcome. So pretty strong bull trend, and after this exhaustive bar here, it didn't lead to the end of the trend, but it did lead to sideways for the next hour and really mostly for the rest of the day. I mean, we still remained bullish, but it was not clearly bullish, clearly trending up like it was here. We kind of came into more of a sideways market through here. So I pointed that out, but there's still buys on the way up. Buying above this bar. Because once again, we have another gap through here. We have a body gap. So we have, this is the highest close here, then the market breaks out above it, and then these bodies never came back and closed below this close. So the tails do. The tails overlap, but there's no body. So we have a body gap through here. Then we get, you can call this a double bottom here, but the market didn't go above the bull bar here. But then another bear trap, market went below this bear bar, and then bull bar. So another potential spot for the market to be continuing the trend there after this pullback. Bull bar, but we're still above the moving average. Still, we still want to try to be looking to get long. Getting a little far from the moving average, but the idea is to be looking for these pullbacks and looking to buy above bull bars. If you're concerned about your probability at any time, then you go for a swing. Or if you think it's more of a normal type of setup and you think your probability is good enough, then you can scalp. So like buying somewhere through here, what are your odds? I think either of these are good for a scalp. So I think you can basically put your stop below and then go for like 5 points, and you would have won both of these. But if you're concerned about your probability, you say, I just don't like where the location, I might get stopped out before. Well, then you can go for 2 times your risk instead of just going for 5 points, so that can help offset your lower probability. Now, the buys we have here, they're similar to the setups we have here. However, this is also coming after this exhaustive bull bar. So at this point, we don't know yet, but this might end up as the end of the trend. So I am going to be more cautious about buying through here than I would be through here because of this exhaustive bar. We do have another gap. So we actually have a gap here and then another gap right here. So that's still good for the bulls. And I still think it would be a mistake to try to be looking to try to get short. So your buys continue. Market didn't go above a bull bar here or here, but it did go above here, so this is where your buy would be here. We have a gap. Bears try to go lower once, twice, 3 times, then a bull bar. So, you know, the idea is to continue to look to buy if the market's going up. Another pullback, bull bar, and this was obviously where the breakout actually started. This was the breakout point. And you can see we got these series of these higher lows. So we got a low, higher low, higher low, higher low, and then a bull bar. So the bears are trying to go lower and they can't, and that's what's really important. So when you're trying to look for like where is the market going to break out and continue in the trend, well, look for the bears to be unable to move the market lower, and that actually happened many times today, where we got that series of higher lows and the market broke out after that. And that's all I'm going to mark here. Then market got kind of into the end of the day, and it kind of became unclear, like how are we going to end the day here. I didn't think a big sell-off was likely because the day had been so bullish. So I really didn't have anything else to mark here. I mean, if I was going to mark something, possibly an idea would be selling here. So you'd be looking at we're below the moving average now, then you're looking at some kind of double top here. So bulls try to go higher, they try to go higher again. You know, that would have worked for a scalp. It would have worked, but probably would be a little aggressive after having all of this buying throughout the day. And the odds of a sell-off at the end of the day were probably not too high because the bulls had been so consistently so strong.